Good evening, everyone, and thank you for joining the Sunday evening Forex breakdown. My name is Gail Mercer, and I will be your hostess today. I would like to remind everyone that trading does involve risk, even if you're trading with binary options. Okay, so just keep it in your head. You should never trade with money you cannot afford to lose. Now, I would like to do a quick sound check and visual check if you can see my screen, and if you can hear me, just type a Y in. Okay, great. All right, we're going to get started then. For those of you that do not know me, my name is Gail Mercer. I'm the founder of TradersHelpDesk.com, and I've actually been a Forex trader for well over 15 years. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, The New Trader's Guide to Trading Nadex Binary Options and Spreads, Trading Nadex Binary Options Using Currencies, and Trading Nadex Binary Options and Spread Using Candlestick Patterns. I've also been a speaker at the Wyckoff Volume Conference, Traders World, Traders Expo, and the TradeStation User Group. I specialize in candlestick price formations, support, resistance, and volume analysis. I would like to invite you to visit my website at TradersHelpDesk.com to learn more about me and the indicators I use. You can also always contact me at gm@TradersHelpDesk.com as well. Now, the first thing that I like to do is actually look at the market reports that we're going to have this week. Okay, for example, you can tell tonight is a bank holiday for Japan. That immediately tells me I probably don't even want to trade the yen tonight because that currency is not going to be open. Okay. Jesus, you're asking what are my best days for trading. You know, it's kind of dependent on how the market is moving. Most of the time I trade Tuesdays, Wednesdays, and Thursdays. Those are my big trading days, okay? This week it may be different because we have the FOMC statement, okay? So, you know, in general, my best days personally is Tuesdays, Wednesdays, and Thursdays. I do like taking long weekends, so that might be one of the reasons why, okay? But Tuesdays, Wednesdays, and Thursdays are generally when I'm trading, but because we have a big rate announcement on Wednesday, I'll probably trade Monday and Tuesday this week. But then again, okay, what are the holidays, okay? You can see from Forex Factory that on Wednesday, Europe and the Swiss franc are on holiday. So that tells me, well, Wednesday morning, I'm not even going to bother to get up at 3 o'clock in the morning like I typically do because everybody's going to be on vacation. Okay? Or they're going to be on holiday. Okay? So in this case, we do have the Spanish parliamentary election today. Now, that's not going to affect the markets too much, okay? Monday, we do have a speech by the Bank of England governor. Tuesday, we have the GDP month over month, okay? And then at 10 o'clock, we have the CB consumer confidence. At 11 o'clock, the Bank of Canada governor speaks. Again, Wednesday, for the first part of the morning, remember that Europe is on holiday, okay? Then at 10 o'clock, we have ISM manufacturing PMI. Then we have the FOMC statement, federal fund rate, FOMC press conference. They are not expected to raise interest rates as it stands right now. And then at 4:15, we have the Bank of Canada governor speaking again. Thursday morning at 7 o'clock, we have the Bank of England inflation report, the bank rate votes, the monetary policy summary, the official bank rate, and then the Bank of England governor will be speaking. Now, Thursday is a holiday in Japan as well. Again, what does that mean for me? That means I probably won't be trading, the Asian session Thursday night. At 9:30, we do have a report on the Aussie dollar, which is building approvals month over month. Now, because that is month over month, it will not be a huge movement, more likely than not, because it's month over month. If it was quarter over quarter, you might see a bigger move, okay? And then Friday, we have the average hourly earnings month over month. We have the unemployment rate, but the big one for the month will be the non-farm employment change. That is one of the biggest movers on the Forex market, is the non-farm employment change, okay? So that gives us an outlook as to how we can plan our week. Now, we're going to go ahead and start looking at the currencies, and I'm going to change all of these charts over to the Aussie Yen. I always start over on my left-hand side, and that's because that's the biggest time frame I have, which is a weekly chart. The middle is the daily, and then I go down to the 360 for intraday, okay? So right now you can see that we've had a pivot high reversal bar to the downside here, which indicates for the week we should get, more likely than not, a new low, okay? When I go down to the daily chart, it is not confirming that. In fact, the daily chart, you can see that you're overextended here. That tells me that more than likely we will get a retracement. Now, where will the retracement likely go? It could go to the slow moving average at 79.16 all the way up to 79.74. That's where the ATR is. I think it's probably going to hit about 79.24. Okay. Now, once it gets there, then I would start looking at it to see, is there a potential entry to the short side, which would be going into the weekly. But that may not be until Thursday or Friday of this week. Okay. Now, you can also go down to the 360, okay, and you can see that this went up, and it did form a bearish bar after this doji, and what's amazing is right now this is a bullish bar, okay? So this is actually doing the opposite of what the candlestick patterns say that it should be doing, which is coming down. I would think that it would come down to about 78.34, and then it would potentially push up, okay? So I think overall, we're going to get a move up and then potentially a move back down, okay? If you're a counter trend trader, you could look for a potential long in the retracement that is coming in on the daily. But then if you're a trend trader, you would wait for it to reach a resistance area and then give you a bearish bar for a potential leg down. Does everybody understand that? Any questions on the Aussie Yen? Okay, I'm going to go ahead and change over to the Aussie Dollar. The Aussie Dollar, again, you're seeing that pivot high formation. That is indicative that the bar that forms this week, and remember that bar does not close until Friday, okay? But what it is saying is more likely than not, we will get a new low that goes below the low of this bar, which was about 69.82, okay? Now, is that confirmed on the daily chart? No, because again, you have a stochastics that is overextended and price is reaching up to find resistance. Now, it could find resistance at 70.82, or it could go all the way up to the ATR at 71.32. But these are the areas right here that I would be watching, okay? again on the 360, and this is what I typically use when I'm counter trend trading. I go from a 360 to a 60 down to a 15. I would want to see it test this blue moving average to say, hey, we have found support and this is what's going to push us up. Okay, right now you're not seeing that, other than the stochastics is ticking down. Okay, that's telling you potentially a retracement will come in. Anybody have any questions on the Aussie dollar? Now let's go over to the euro yen. In the euro yen, we had a bearish bar last week. That is indicative that we may get another bearish bar this week. Again, you see that the stochastics is overextended on this daily chart. Again, I would be anticipating it to go up to 125.23 or 125.84. Okay, these would be like my target zones, only because they're trying to find resistance. And the reason they want that resistance is it enables them to push down again. Okay, so the move up to here would be a counter trend trade, and then the move back down would be your trend trade. Okay, and this is doing more of what I would anticipate. It moved up to the slow moving average, the fast moving average, formed this bearish bar. Now, if this bar continues to be bullish, that's where I think we could potentially get that move up to test for resistance. Now let's go over and look at the euro dollar. And again, I always start over on the weekly, which is the left-hand side. And you can see that we did have a bearish bar develop last week. Now, the one thing that would strike me is really curious on this one is that right now we are making lower lows in price. And you can see from this low over here to the current low, it's actually higher. Now, you can't read that yet. It's just something I'm always aware of. There we go. And we'll do this one to here. Now, this would be a typical divergence, but you cannot read that until you get a bullish bar on the weekly chart. Well, we have 5 days of trading, so that may well be a bearish bar. This is where I start looking at the daily to say, hey, is it coming in on the daily? Okay. And as you can see on the daily, you already have your bullish bar. So if you go in here and mark these, this is where you're seeing your divergence. Okay. This is typically when price goes up to test for resistance. Okay. Now, again, where is it likely to find resistance? Well, it could find it at the fast moving average at 1190. I think it's probably going to be 1223 to 1248, which is where the ATR in the slow and medium term moving averages are. Okay. When you go down one more time frame to the 360, you can also see that you had divergence here. Okay. That caused a reversal bar to form. It's come back to test the fast moving average, but I think it's going to fuel an upward move. Remember though, that until you get that divergence over on that weekly chart, this would be considered a counter trend move. What does that mean? It means if you're counter trend trading that, don't hesitate to take your profits, okay? Counter trend trades can go against you very quickly, okay? Let's go and look at the British pound yen. We had a bearish bar develop last week. Tells us that this could potentially be a bearish bar for this week, okay? But when I go down and I actually look at this chart, the one thing that I see is that we're forming a double, actually a triple bottom that has held from here to here to here. Okay, so just looking at this chart, I think we may actually go back up and test 145.70, but I would also watch out for 144.79. Okay, then I go down to the 360 and say, okay, is there anything that collaborates what I see on the daily? Okay, well, one, you're getting divergence here, and these are patterns that I like to see. You have that divergence here. Okay, if you're looking up at price, okay, you have that little double bottom here where they came back to test this one and formed a bullish bar. They've come back to the fast moving average and they're forming a bullish bar now. So yeah, this is pretty much confirming what I am seeing over here with that triple bottom. Okay, now remember, right now this would still be a counter trend trade in my opinion, unless the weekly forms a reversal bar, which will not occur until Friday. Does everybody understand that? Until then, in my mind, this is still a downtrend. All right, let's go look at the British pound dollar. British pound dollar, you can see that you are overextended on the weekly. You are overextended on the daily. Now, this is one I really believe that is going to come up to the ATR, basically because we have the magenta dot that usually tells you it's going to push back stronger and will typically come back to the ATR, which is 30.33. Okay. Then when we come down to the 360, you can see they tried to make this little double bottom here, and the buyers came in. I would like to see another bullish bar develop. I would like to see this ATR go from red to blue, and then I would like to see them test it. It's probably going to end up being, I would say, around 29.08, 29.10, where that comes in. Okay, that would be the first move to the upside potentially. Okay, now one thing to consider, if this stochastics is going to turn up, what will cause that to happen? It would be a bullish bar, and that bullish bar would need to close above 30.18. Okay, that's when I would get really interested in this, because that's coming in on a weekly chart. If that comes in on a weekly chart, then I'm anticipating price to go above 33.85. Okay, is it going to happen this week or next week? I don't know. Okay, but it's just, this is a weekly chart that's going to be a strong move. Okay, let's go and look at the USD CAD. Okay, the USD CAD is right at that ATR. You can barely see it, but it's testing that ATR on the weekly chart. That's at 39.56. Okay, and then you have the bearish bar here. This closed under the low of that bearish bar, and this is starting to tick down. I do think we're probably going to see more downward movement on the USD Canadian. Okay, you could potentially go to 34.32, or you could come all the way down to 33.56. Okay, so that's about 104 pips. You know, that could be potentially a binary. It could potentially be a call spread. There's a lot of different ways that Nadex allows us to trade that. okay? Do you see how this came back and it tested that fast moving average and then it formed that bearish bar? That's the formation that I like to see on those other charts that I showed you earlier, okay? If you get those types of formations, those are really good to even utilize, for example, the touch brackets. If they are available on the currency that you're trading, those are really good price formations that you could potentially trade. Let's go and let's look at the USD Swiss Franc. So this one, we finally closed above that congestion dot area, which is this line of congestion dots. We've had strong bullish bars, but then when we look down to the daily, do you see that double top formation right there? That doesn't mean the market is turning. That's a common misconception with some traders. That means that, hey, it's going to push down and test for support, okay? I would anticipate it coming back to 0114, okay? Especially because you are overextended on the stochastics, on the RSI, and on the ADX, okay? And this is a great example of when I choose a touch bracket, okay? Because this could potentially be a big move down because you have three indicators and they're all overextended, especially the RSI, which is for really dominant markets, trending markets. So this is telling you you are overbought, you are overbought, you are overbought, and you have a price bar formation that tells you you are potentially going to go down in price to test for support, okay? Could you add binary options and call spreads? Sure. But, you know, when I see one like this on a daily chart, this is when I'm looking at trading those Nadex touch brackets. Now, when I go down to the 360, let me take this one off of automatic. This is about timing, and that's what I use the 360 or the 60 or the 15 for, okay? If I'm looking to enter this, is this the best time to enter, okay? No, I would wait because this is right at the point of being what? Oversold, okay? So what's going to happen? It is going to move down, and then it's going to go back and test this area around 0212. Then it's going to form potentially another bearish bar, and that's where I'm going to time my entry. Does everybody understand that? And what if that doesn't happen? Then I don't trade it. You know, I don't go into markets that are already overextended. And right now, this is an overextended market. It has to, it's what I call normalized. It has to come back to a normal level before I will go back in. And last but not least, let's go and look at the USD JPY. Okay, the USD JPY has just formed a reversal bar at the ATR over here on the weekly chart. Now that automatically will give me a bias to the downside, okay? Now, if I look over here to the daily, now remember, this is telling me my bias should be to the downside, okay? So when I look over here, I see that we tested this line of red dots. We were unable to break through it. So I think more than likely we're going to break through this ATR. So should I just jump into the market now? No. Again, go down one more time frame. Is this the optimal time to enter? And I don't think the 360 is showing you that. You did have a bar here. It came back and it tested this ATR and it closed down, okay? But that was a pretty wide bar. from 111.43 up to 111.05. That was over 65 pips. Normally, they're going to come back to, I would say, at least about 111.80. They could come back to 111.85 and again test that area for potential resistance before they continue down. That's just typical price behavior from what I have seen. Now, you know, the only thing that would change my mind on that was if they were able to flip this ATR, meaning it goes from red to blue, okay? That's the only thing that would change my bias here, okay? It's going to be Friday before they can change my bias. So that means if I want to trade this up to the ATR, what is that? That's a counter trend trade. Then I have to look at, okay, this is at 111.60. The ATR is at, say, 112. That's 40 pips. I'm not going to do a touch bracket on that. I'm probably going to do, you know, an out of the money binary or maybe a call spread on that one versus a big move that's coming off of a daily. Okay? Does everybody understand that? Any questions? Okay, if there's no questions, again, I would like to thank you for joining us tonight. I do appreciate you joining us. If you need any assistance at all, okay, you can actually call me at 336-263-0122, or you can email me at gm@tradershelpdesk.com, and I also invite you to visit my website at www.tradershelpdesk.com. Well, thank you, Maverick. I appreciate that.